Yeah, I mean, I think, as you said, look, I mean, interest rates are going to rise this week, and the end result of that is going to be a stronger dollar and a weaker peso, and especially in the Philippines. So our strategy will be very much to move away from the likes of consumer goods that are going to increase in value, more into financials, energies, industrials. Oil, a little controversial given the big glut in the market at the moment, but
that big surprise last week.
Yeah, of course, yeah, and but I think longer term, the cyclical goods like oil will tend to rise in that type of environment.
Okay, now what other potential risks are you watching out for? Is it just, of course, inflation? We have weakening currency, especially in emerging markets.
Yep.
Oil prices, which you mentioned. Any other geopolitical risks, perhaps, that you're watching out for?
Yeah, I mean, I think the weaker peso is going to be the biggest issue domestically. And with a weaker peso becomes more inflation.
Okay.
Yeah.
Yeah, you mentioned also consumer goods. Consumption might not be that strong, but we are known as a very, of course, big consumer market.
Yep.
So how does this all tie in? Do you see, of course, we have a lot of income coming in from BPOs and OFWs, and these could stand to benefit from a weaker peso. So
Absolutely.
how does this all play in together?
Yeah, I mean, the two biggest exports are BPOs and OFW remittances. With a weaker peso, the remittances are going to increase in value, even if the actual dollar amounts don't. So that's going to result in inflation. That's going to put your average price of your weekly grocery shop, your gasoline, all those types of consumer goods. That's going to increase that price. And we saw the same thing in the UK after the Brexit referendum.
That's true.
Even now, your weekly grocery shop in London has gone up, or you're getting less for your money, and a similar effect will be seen here with a weaker peso.
Okay, so consumer stocks, your outlook on the consumer equities, have they gone down?
Slightly, yeah.
Slightly. Where would you suggest that people put their money if they were previously invested in consumers, and I'm sure a lot of people are?
Yep.
Where would you suggest they put their money?
That's an interesting question. I mean, most money's flowing out. We've got net outflows in the Philippines at the moment. Financials are obviously
Yes.
financials are obviously going to be the hot topic. With higher interest rates means higher margins. As I said, energy. Again, the cyclical goods, so that's really where we're focusing on. But as a company, Global Eye, we're much more of a longer-term outlook investor. We don't just speculate in specific sectors. We would go more on the lines of taking a long-term view on specific fund sectors and asset classes, depending on what our clients are looking for within the parameters of their risk profile.
Okay, that said, what is your long-term view on the Philippines as an investment destination for your clients? Like you said, you do have a lot of foreign and domestic clients as well. With all these risks cropping up about potential protectionist policies all over the world affecting trade, now, how would this affect the Philippines as an investment destination?
Well, look, I think a way to answer that would be to look, if we talk about protectionism in the US, and the biggest impact would be potentially here is the BPOs and possible severance. And I don't think that's going to happen, a complete severance. At the end of the day, the trade agreements that are put in place, they're very much set in stone. There will be ways for businesses to continue. And let's face it, the America First policy is very much exactly that, America First. And for these big BPO companies who have invested billions into this country to create these outsourcing centres, to impact their bottom line in that manner would be detrimental to America and would not be putting America first.
All right. So from America, let's go back to the Philippines. Our growth vis-a-vis our ASEAN partners or ASEAN peers, take a look at that. 6.8%, highest among all. We beat China also last year. Now, how will Philippine growth be affected with ASEAN integration? Do you think, in terms of, if you're an investor and you're going to pick among these countries, and you said you divide your time between Malaysia and the Philippines, tell us what makes us, let's say, more attractive compared to our ASEAN peers, and where do we lag behind them?
Well, I think the biggest thing to say is that the Philippines is very much an externally driven economy, as I said, through OFW remittances and BPOs, whereas other ASEAN partners are very much internally driven. The biggest risk here is exports. Exports have gone down from 50% in 2000 to 31% of GDP as of last year, and particularly in the mining sector, where there's all sorts of issues. And I think if those exports could open up, it would make the Philippines a lot more attractive place.
Okay, well, you've been doing business here for a while, I think over a decade, if I'm not mistaken. Now, of all the things you have that have room for improvement here in the Philippines, which I'm sure there's a lot, which do you think is the most crucial for us to say on this growth trajectory?
I think I think number one is infrastructure. I think the infrastructure, transportation, that's the biggest issue, and it's even in part of the 10-point economic plan from President Duterte to improve that.
Then would it be indispensable, in your opinion, for the comprehensive tax reform program to pass? Because that is what would be used to fund this infrastructure push.
Yeah, I mean, I'm just a lowly foreigner in this country, and it's not really my place to comment on domestic tax. But I think for the Philippines to remain competitive, they have to improve the infrastructure here, and in order to remain
so
competitive edge.
To know everything that it takes in order for the infrastructure push to go on as planned.
To an extent, but there's always a fine balance on these political agendas, and I think it's taking one step at a time and having a plan in place, but just as you would with an investment portfolio, having a plan, but rolling with the punches as and when things progress.
So bottom line, bullish on the Philippines still?
Yes.
Very?
Yeah,
All
yeah,
right.
just yes.
Thank you very much for the vote of confidence and your insights again.